What is going on, everybody? Welcome back to another dividends video. In today's video, we're going to go over two of the biggest basically dividend stocks or monthly dividend stocks that a lot of people talk about, and they find usually pretty fast when they're looking for those monthly dividend stocks for income. So with that being said, let's cue the intro and jump right into this video. I've been getting dirty money. Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's going to help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video. Okay guys, so Main Street and Gladstone Capital. I'm sure if you have been looking for monthly dividend stocks, you have either found this video or you have found many just like it, or if you found these stocks. Now, these two are both solid companies. Now, you got to remember what they are doing. Now, both these companies are BDCs, so they're business development companies. And what they do is they invest into companies that basically can't go public yet and allow them to make money, and basically they give you the profit and a certain percentage of the profit and a dividend, and they keep doing this over and over and over. So what we're going to go ahead and do here, you can see that there's a big difference in the trading cost here. So what we want to go through, and I want to always make sure, we always do this in every single one of my videos, let's look at the max overall performance, not just the 1 year. So max overall performance, based on the two, just at a first glance look, I'd probably be more inclined to be going with Main Street Capital, just because it seems like they are appreciating faster and faster. Now, Gladstone's kind of overlooked, and I think that this could be a possible sleeper, but again, let's go on ahead and weigh these out and see where we would be, both income-wise and overall portfolio-wise, because you got to remember both of them. So with that being said, we're going to jump into the websites. You guys can all get to these. Now, I know because I have worked for one of these before, not for the BDC, but for a company that was owned by basically one of these companies. It was not either one of these companies, but what they do is they buy other companies. And what I want to go through here is you can see some of these companies that they own. You guys may know some of these where, they're invested into these companies. And yeah, I don't know any of these right off the top of my head. Again, I haven't really looked 100% through, but I mean, if they're in energy groups and stuff like that, that there's a ton of these, and you can go all the way through these. I'm sure you guys can find one that same with these guys, and you guys can see that they're kind of a little bit everywhere. Automotive industry, digital marketing assets, all these kind of different things. So what I kind of want to go over though here is, which one should you be looking at when you go head to head? Which one am I going to choose? So the first thing we want to look at is, like I said, the overall. Where's it been through, price wise, based off of what, you think it's actually going to be worth. You can see there's a massive price difference, about $12 versus about $41.50, $42. And that does make a huge difference when you're looking at it, because Gladstone instantly, if you're a dividend investor, becomes more appealing because you're going to get more dividends every single month. It doesn't mean it's going to be the right choice, but first sight, it's going to become more appealing for a lot of investors. Now, let's go over to the dividends and let's compare them side by side. So, for a $41 share, you're collecting 21 cents. They actually just upped their dividend here this month, which is really good, from 20.5 cents to 21. That's a really, really good sign that they are upping their income or their dividend every single month, compared to a lot of companies right now that have been cutting their dividend. And if you guys watched my last video, you guys know PTY and a couple of other funds by PIMCO that are closed-end funds have actually closed it off. So it's a good sign for Main Street Capital, I'm not going to lie here. So then we have Gladstone Capital, and this is where it's not great, guys. It's a 6.71, and then you got Main Street over here at 5.91. But the 6.71 is appealing, of course it is, absolutely. Why wouldn't it be? But what I notice instantly, and that's not appealing to me, is that they cut their dividend by a half a cent every single month here for the past, since 2020 started. And I'm not saying that's an absolute awful thing, But remember, and they cut it there before too. So you were talking about 14 cents a share back in 06. And yeah, they were going up and up and up. Now they're a little bit worse. So at first, now that we have that information, you're probably looking, hey, maybe Main Street Capital is probably the better idea. You're still getting almost this, I'm going to say this is probably a 6% total return every year, which is not great, but it's not bad for that monthly dividend you're trying to compound. You're not just trying to grow. You're not just trying to get that portfolio to grow 100% into the biggest dollar amount, but you're trying to get that monthly income to grow as well. Because remember, there is a difference there. Now, when we go back to these websites, and again, this is something that I like to do a lot, is you guys can go through all of these. And this is something that they're going to try to tell people to get, to invest. And the first thing that you see here is that Main Street Capital obviously has done a better job at showing this. And it's nothing against Gladstone Capital at all. It's just if you are somebody new to investing and you're wanting to get these dividend income, this just looks better. It just is, sadly. So when we come back, and this is the big thing that when I go to look at things is I want to know, based off the past, where are we going to end up sitting? And you guys can see I've already done, it's year to year, 1985 to 2021. Include year to date. We're going to click that to yes. We're going to start with $1,000 because that's what most people in America have to start with. And then when I get the contributed fixed amount is monthly, make sure you guys change this. And we're going to make it $400. Again, where I get this number is because the average monthly car payment is $500. And I say if you can do $100 a week, that's even better. So it's $400 a month you're going to be able to invest, which is quite well. And then we're going to go over into here, and you guys can see I've already made this here, 100% allocation to each portfolio. And then you're just going to come down here, and we're going to analyze this. So it's 100%, of course, and then we get to take a look at it. So we have SPY, Main, and Gladstone Capital. Now, as we can see, kind of based off of what I figured already, Gladstone is a little bit underperforming the S&P 500. Not by that far, though. As you can see, back in 2010, they were actually quite a bit above it. And now they've just kind of been trailing it just by a little bit. Obviously, 2020 happened. Everybody knows that. And then now it's just not making up as fast. Then you have SPY. S&P 500, of course. That's kind of what we compare everything to. And then Main Street Capital, which obviously has, it seems like more companies under their portfolio. And again, that's where you went back into here. And portfolio companies, basically meaning those are the companies that they've invested in and that they pretty much own a percentage of. And then you see it here that they are actually above S&P 500 totals here. So, and then we're going to come back into the portfolio income. Gladstone is obviously selling itself a little bit short when it comes per year. Main Street Capital is obviously going to destroy SPY when it comes down to the capital of every single month. Getting a dividend, you're getting more shares, you're going to have that compounding effect a lot faster. But let's go in here and I want to see the overall. And this is where I'm very happy with this stock, actually, Main Street Capital, and very underperforming Gladstone. So I'm not real happy about them. Because again, you can see it here for yourself. Main Street Capital is obviously going to be the winner. We knew that from down here. But Main Street Capital does a fantastic job of not only creating the monthly dividend, they're upping it every single time. They didn't cut their dividend during bad times, which is a huge, huge sign of strength. And they know what they're doing. Their management's good. And they're beating the S&P 500. And they've been beating the S&P 500. What year does this start? So since 2008, when basically the whole crap storm with real estate happened, you have this continued growth. And again, this is, you have your max drawdown, but you guys are going to have that no matter what stock you choose to invest in. But you're going to end up with, if you do this over, well, this is just about 10 years, you're going to have, if you do it with $1,000 and you end up doing $400, you end up with over $250,000, which is great for most people. And if you let that compound even further, you're going to have a huge amount. See, if you look back at 2016 here, you almost made 10 grand extra just from Main Street Capital, which is absolutely fantastic when you have little money compared to what's 2016. Let's see kind of where you're at. 2016, you only have $100,000. So that means, yeah, you are getting about that 10% on your money, which is great because you guys know the S&P's supposedly averaged over the past years 12%. Now, I don't think let's not get into that. But I don't think the S&P is the best investment for everybody, but I think it's a great investment if you absolutely have no idea what you're doing. Now, if you're in this video, obviously you're trying to learn, and I do think that there are better companies to trade in other than the S&P 500 and to invest in. Now, I'm not going to lie and say I've never invested into the S&P 500 because when I started buying companies that were strictly in the S&P 500. But as you can see, when it comes down to this portfolio, and you guys can see in these numbers, in 2021, which is not over, you're already at $11,000 in income. Now, obviously, you're going to see 2020, it did a little bit here at $12,000 compared to the $14,000 in 2019. So if we go back here, let's see if it missed. Why was it a little bit lower here? I think that's the big thing to see. So yeah, you're going to see that it did not pay a dividend in December. And I don't think that's an absolute awful thing. I think they were just protecting their investors, which is okay. I would rather them, be able to cut down on some debt and stuff like that, like AT&T is doing right now, but they cut their dividend permanently. That's not excusable. If you guys haven't watched my last video, which I went over PTY, when they cut for a month just to save a little bit of money, it's not that bad of an idea sometimes. Sometimes, just like with real estate, if you don't take your profits out of your real estate every now and then to fix things up and to keep more equity into your things and to keep updating things, it's okay. So if I see 1 month, now I'm not real happy about it, but I can understand it. And that's why I'm waiting on PTY still. But as you guys can see, they have upped their dividend, which is a great thing. And they're going to I think they're going to keep doing pretty well because there's a lot of companies out there that can use the income that they get from and they can make some good money off of it. So I think here you're going to see that you're almost caught up to Main Street Capital from 2020. And you're going to see 2021 obviously beat 2020. 2021 is obviously going to be better, and 2021 is not over yet. And I got a feeling you're going to end up seeing 2021 beat 2019 as well. So you could end up with you're probably looking upwards of probably $16,000 in income just from holding a stock. I mean, it's $250,000 worth of stock, but you're doing absolutely nothing. And I know there's people out there that live off $20,000. I'm not saying that I live off of $20,000 a year, but I know that there are people out there that, if you have no bills and stuff, you can live off of $20,000. If your house is paid off and you're doing the right steps, you guys can do this. And think, if you're going to work for the next 30 years, you can have a lot more than this as long as you let the compounding take effect. So with that being said, thank you guys all for watching this video. Me personally, I'm going with Main Street Capital. I'm not impressed with Gladstone Capital at all. If you saw my last video on Gladstone, you know that I saw that there was some warning signs on there. With that being said, thank you guys all for watching, and I look forward to seeing you guys in the next video.